Hey guys, Dave with Moniology here. Hope everyone is having a great day. Today's May 29th, 2021. This is the weekend market review. We'll make this one a public preview available to all Moniology followers, but not only limited to Moniology Premium. Let's start with copper. By the way, as an aside, for those who are new to Moniology, these are weekly charts. So we're going to take a look at various different segments of the market, sectors, asset classes, globally diversified to get a better sense of where we've been, where we are, and where we may be headed. Let's start with copper. So copper bounced off perfectly off support here around this 440 level, had a beautiful hammer pattern up 4.39%, creating higher highs and higher lows again, and looks to me like copper wants to break out above 490 and make a new high here. So long as it stays above the 69.1 level, copper is going to be making new highs, and this chart looks very, very bullish right now. Gold continues to do very, very well, bouncing off multiple levels of now upward sloping support. You see here we just had the bullish crossover of the 13-week above the 26-week moving averages around 815. Now that's going to come in as support. If there's any pullback, I expect to see these rising moving averages continue to serve as support. But we've had 4 straight weeks of upside. Did we pull back some? It's a possibility. This would be an area where I would consider that a higher possibility. But we are now above the 61.8 level Fibonacci, and even any pullbacks will be very short-lived. I think we're well on our way back to retest those 2100 level highs. But notice what's happening here. Momentum is higher right now on this particular move than in my opinion, than it was last time. Why do I say that? Well, it's not my opinion. This is what the charts are showing. Momentum is higher at 1905 than when gold was at 1966, which means that this move is legit and it's breaking out. And right now is a great opportunity to be long the gold metal. Gold bugs index. So gold bugs index stalled here at 61.8 level. We have to be a little cautious right now for a potential pullback, because even as gold was up here 1.5%, the gold bugs index did not move up. So potentially some negative divergence of the metal's performance, rather the miners' performance against the metal. But let's take a look at how the juniors did. They were up 1.5%. So maybe that was just tied to one company within the IBUY index that really kept it down. But definitely something to keep an eye on. This one is also approaching 61.8 level here, and so that could serve as a potential stalling point for in the very near term. So we'll want to take a look at on Monday evening's review. We'll want to take a look at the daily charts to see if there are potentially some negative divergences setting up on the daily charts that might suggest a potential week or two pullback here before we set ourselves up for higher prices down the line. Gold majors, so they were up about a third. Did close the week just above the 61.8 level. So gold majors look good. I continue to believe that next target is at 46 level. Eventually, this is going much higher. Crude oil. So crude oil was acting weak for the last couple of weeks. There was not much momentum, and it looked like it was decelerating. Couldn't break above the 69.1 level. And last week I said if this 61.8 level cannot hold, then I think that we're headed lower. But it bounced up 4.3% on the week. Chart looks re-energized, if you will. The MACDs have consolidated in negative territory and look to be ready to move higher. And if that's the case, then we could see energy moving towards that 75 level quite soon. Marijuana. So marijuana really broke out last week, and not much a surprise, because we've been talking about the MACD starting to reverse higher. This is a bullish wedge here that was setting up, and it broke out, and now it's once it breaks this 13-week moving average around 11. Well, the 13-week is around 1076. Right above that, there's some resistance around 11. If it breaks this 11 area, then I could see this going back towards 1550 at a minimum. right now the downtrend has ended, right? And now the new uptrend has begun. The question is, how long are we going to see this uptrend for? That remains to be seen, but there's a lot of energy right now that's been rebuilt with the MACDs having corrected here for a while. So I like marijuana here right now. I would have a stop loss below $9 and continue moving that stop loss higher because it does trade volatility, quite volatile. Palladium. Palladium, it pulled back here at the 69.1 level, which is the same level it broke down from at previous highs. So it had negative divergence on the new high. So that was a bearish development. It did bounce here off of 61.8 Fibonacci off of this previous support level. So let's see if it can recapture these levels at 30.10 and make new highs. But I don't like what I'm seeing right now in Palladium. There's some I would not be chasing this trade higher at this point. Negative divergences, quite a bit, quite a bound, and so if this uptrend from 2020 breaks to the downside, and so far it's holding, but if it breaks to the downside, there could be some pretty bad downside on Palladium. So unless Palladium breaks back above the 69.1 level here, I would not be chasing this particular trend. Platinum. So platinum sold off as well, and I don't like what I'm seeing with platinum here, and I'm not sure why this is happening. But bottom line is, it created a negative divergence here, where at 1281 momentum was lower than the previous time we were at the 1281 area. Now we're in negative territory, so it might be a couple more weeks before platinum rebounds, if at all. So we'll be watching that closely. Silver looks very good right now. Silver closed the week above the 61.8 level. Looks to me like it's readying for the breakout above 30. I like silver a lot here, and the stop loss, if you're trading this, should be moved up to about 26 on silver. Silver juniors looking good as well, up 2.86%, breaking above the 61.8 level. Basically above resistance here, right? There's not much. Next target is 19, and above that it's blue sky. So silver looks really good. If I'm got a gun to my head and I'm looking at one precious metal investment, that would be the silver juniors, the SILJ, as a diversified exposure to the sector. Silver majors breaking out here as well, 2.12%. And if this breaks 50, this is going to blue sky as well. Really, there's not much resistance till you hit this previous resistance around 70. So I love the silver juniors, silver majors. Let's take a look at uranium. Uranium continues to hold this uptrend. Basically closed at the highs of the week, closed above the 69.1 level, and I think uranium is very, very close to an upside breakout above 23. That's going to see a major push higher. Now, the one caveat is MACDs are right now creating lower highs and lower lows, so it needs to reverse higher like this, or potentially might go into bearish territory for a while, which might suggest weakness in uranium. When I see the RSI, I'm thinking this is going to break out higher, but the MACDs are not yet confirming that. Uranium Participation Corp had a nice bounce off the 13-week EMA around 536. Closed the week above the 61.8 level, so it held that level, which is very important. We're watching for that breakout above 6. Once 6 breaks, you're going to see much higher prices in this particular ticker, as well as the underlying price of uranium. All right, let's take a look at retail ETF. This one is in a bullish flag and looks to me like it's about to break higher, and that would bode very, very well for the general equity markets. It's been in a downtrend since roughly since August of last year. Even though the price went higher, momentum has started to decelerate. Broke out here for a while, but then quickly broke down, and this is the trend line that we're watching. So if it can above this trend line, you want to own this. Below this trend line, you don't. And in terms of price, I'd be looking at roughly 122 to 123 as a buy-in target on this particular ETF. Emerging markets are starting to really pick up steam, and that's a really important and valuable sign here for general equity markets and commodities. Bounced perfectly off the 50 RSI level as we thought it would, and it's starting to break out. It's going to retest these previous highs at 1450 and likely make new ones relatively soon. You'll see why once we cover the Shanghai Index. Housing bounced nicely here off of 460, and so far so good. Bounced off the trendline support as well as a 61.8 level. So let's see how much energy housing can muster up to create a retest of the previous highs, potentially making new ones. Microcaps looking good. We pointed out last week that it was very close to a breakout here above this bullish wedge, bullish pennant, bullish flag, bullish pennant pattern. And in an uptrend, it typically resolves to the upside. And sure enough, last week up 3%. And it looks to me like it wants to move higher. If this breaks and we're already above the 61.8 level, I think you're looking at a retest at a minimum of that 159.38 previous high. But with the MACDs having recharged their batteries, I think you're looking at much higher prices in the microcaps. iShares Technology, so it stayed above the critical 69.1 level, bounced off of support, and not technology, I'm sorry, transportation, and continues to want to march higher. We'll see if that is the case next week, but that's a positive sign that it bounced here. It looked like it was weakening for a while there. NASDAQ, so NASDAQ is still in bearish territory in terms of the MACDs, but there are a number of signs that suggest that NASDAQ is getting ready to push higher, and still in a downtrend from a technical standpoint, but I'm liking what I'm seeing, and here's why. Let's take a look at the Qs. They present a better picture. So we're in a momentum downtrend. That's without a doubt. Many multiple inflection points here. But if this can break to the upside, and the more attempts at this trend line, the more likely it'll break, then you're looking at a new leg higher in equity markets. I like the fact that we bounced off the 26 EMA multiple times here, and looks like 337, which is the previous resistance level, is about to break. Notice we had a higher high and higher low, and so I think we're setting up for a breakout on the NASDAQ. So we'll be watching this very, very closely. Regional banks, they're looking strong as well. I mean, so this is interesting. You'll see why they're holding very strongly above the 69.1 level. Bullish hammer pattern looks to me like they're building for a base for much higher prices, even as the MACDs are in negative territory. So regional banks are holding up quite nicely. S&P close to all-time highs. The previous high of 42.38 might be broken as early as next week. Let's see if it can break the 69.1 Fibonacci level and potentially this downtrend in momentum. Semiconductors looking strong for a second straight week. Let's see if it can break the 61.8 level next week and this downtrend. It's got a lot of work to do, but if it breaks that level, then you're looking at a retest not only of the previous highs, but of this trend line here, which would mean higher 52-week highs. All right, so this is the most important chart, equity chart in the world. I've mentioned this a couple of times. The Shanghai Composite. So very few people are talking about China as a place to invest right now, but this arch suggests that we're going to have much higher prices in the Shanghai and therefore emerging markets. Look how beautifully it bounced off the 50, up 3% last week, and this one looks ready to go. So very, very bullish chart. You've got the MACDs recharged and getting ready to move higher, and so I'm very excited about what this might mean for equity markets over the next 12 months, just based on this chart alone. Shipping, on the other hand, shipping looks to me as it might be reversing lower. This uptrend since December of 2020 looks to me like it's broken. Question is, this could be just a bullish flag and a continuation pattern. But when I see RSI breaking down like it has here, it suggests that this is more than just a bullish flag, and potentially we reverse lower to test at least the 50 RSI level here. So I would not be chasing shipping right now. Small caps looks to me like they're basing and consolidating and about to move higher here. Very bullish on small caps given this chart. It looks like energy has been recharged. Here's the SPY. On the one hand, you've got a bearish wedge setup. On the other hand, you've already broken the downtrend and looks to me like we're setting up for a move higher. Notice it closed above the 69.1 level. So I'm very constructive on equities right now. Here's another look at the transports. Looking strong right now, bounced off of this bullish wedge breakout, a bearish wedge breakout rather. So far so good on the transports. All right, the financial sector as the XLF, and it continues to bounce off of this trendline support and very bullish, and it again speaks volumes about what's going on in the general economy. Things are getting better. Now, the narrative has been that the 10-year U.S. Treasury, if it breaks out, then financials do well, but it's breaking down right now. So this is interesting. This is a breakdown here that it looks to me like it was it was setting up for a breakout, but momentum is decelerating, which means that the 10-year U.S. Treasury likely breaks down here and retests that 130 area. Question is this happening because of some sort of general market move, or is this something that the Fed, the U.S. Federal Reserve, is doing? I don't know, but the point is that if this is a natural market pullback, then does this suggest that things are weakening in the general economy? I don't know. This is just, you look at the equity charts and things are certainly improving, but then you look at the 10-year U.S. Treasury, which you would think would be breaking out under those circumstances, and it's not. So is this a temporary pause, perhaps, or is this the start of something different? And we'll have to keep a very close eye on that. High yield index option adjusted spread index. This is a mouthful, but the lower this index goes, the better it is for equities. And it doesn't have to go lower, but if it stays below $4 or 4 on this ratio chart, that would be a very positive sign. That just tells you that the spread that you're getting for junk bonds is low relative to higher quality credits, and that's a sign that general credit conditions in the markets are good. Inflation continues to rear its head, and it looks to me like we're about to take another leg higher on the inflation gauge. And again, above the 69.1 level is where you're getting the biggest moves. We've got just very, very bullish chart here. Volatility broke down last week, down 17%, could not break above the 50 RSI level, and it looks to me like the markets are just setting up really nicely to continue moving higher. Let's look at consumer discretionary versus the staples. So far, they bounced here. Let's see if they can break above the 50 RSI level next week. But right now, I would not be chasing consumer discretionary relative to the staples until this breaks to the upside here. And this could be a growth versus value trade versus a defensive versus more aggressive sectors of the market trade. The microcaps versus the S&P, you want to see this breakout higher, and it has, and it bounced off the 50 RSI level very nicely. And with the MACDs recharged, I like this trade, this pairs trade, and with the microcaps against the S&P 500 here. All right, let's take a look at some crypto and then the US dollar, and then we'll call it a night. So Bitcoin right now is in bearish territory without a doubt. It broke below this downtrend, below this constructive RSI trend, and unless this can break back above this level and above the 50 RSI level, Bitcoin is now in a bear market. And if it cannot hold this arch pattern, I think the next target here is about 27,500, possibly as low as 20,000, and worst case scenario for the crypto bulls is 12,500. I'm not saying that this is going to happen, but this chart is broken, and so it might take a couple of months, if not years, to rebuild this particular uptrend that has been broken. Dogecoin. So Dogecoin, you might say, well, it's in a bullish flag, right? And sure enough, it looks like it's in a bullish flag, but momentum has broken down. And a lot of folks, I've been talking to people that think that Dogecoin, well, it's going to bounce back. Not necessarily. I could see Dogecoin back at 8 cents in no time. And so I would be, frankly, jumping off of this wagon, because I think it's going much lower based on the momentum divergences to the downside. Ethereum, we love Ethereum, but this, if it cannot hold this 2000 level, and it's going to be hard to hold. It's below this arch already. Momentum is broken down. If it cannot hold this 50 level, so far it's holding, which is constructive, but if it can't hold it and does something like this, then I think Ethereum's headed to 1400, possibly as low as 400. Again, this is a low probability scenario, but right now there's just a ton of weakness. And look, bottom line is there are just so many altcoins right now. What's the benefit? I mean, again, I don't know the answer. I'm sure there's a good answer to this, but what's the benefit to one coin versus the other? And that's really the question that I personally have. I don't know any way to value any of these coins other than looking at charts. So, what's the fundamental basis of owning any of them? That's the challenge. And once that's figured out, I think they'll resume to the upside. But until then, I think you're going to see a lot of weakness and volatility. Clearly, this was in a downtrend for a while, and we've been pointing that out. Negative divergence. And when Litecoin, it hit our target, which technically was a beautiful hit, right? But with negative divergence, it couldn't break out higher, and then down we went. So far, constructive bounce off of 140. But if that can hold, you're looking at a move towards 80, and I think that will likely happen as the next directional trade. Polkadot bounced so far, but below 50 on the RSI. This is in a bearish trend right now, and I could see Polkadot moving towards that $10 level. US dollar, it's struggling right now to hold this 38 RSI level, to hold 89. Let's see which direction it goes. It can go either way. It could bounce here because it's kind of a back test of this bullish wedge and break out higher, and or it can break down. And it's hard to get a clear picture. Bottom line is, below this downtrend, you're looking at much lower prices in the US dollar. Above it, well, then there could be a reversal. But given what I'm seeing in the equity markets and inflation, I think the US dollar goes lower, possibly all the way down towards that 80 to 81 level. Finally, Ripple. So far, Ripple has bounced constructively off of support, right? This 80, 85 cent level, and off of 50 RSI. But if that can hold, then I think you're looking at a move back towards 50 cents here on Ripple. And I think that is the likely scenario that it does break down. That's it for me, guys. Let me know what you think. Let me know if there are some other charts or sectors or assets that you want us, asset classes that you want us to cover. Really appreciate your support, and check us out, Moniology.com, and on Patreon.com/Moniology. If you want to support our work, it would mean a lot to us. Thank you. Have a great week. And for those of you in the United States, happy Memorial Day. Take care.